Verizon and AT&T reported quarterly financial statements this week. I've gone through those financial statements to determine which one of these two high yield dividend stocks is the best dividend stock to buy right now. So in this video, I'm going to go through the latest earnings for both companies, the big picture items, and then I'm going to look at some key historical figures for Verizon and AT&T. And finally, I will answer which one of these two is the best dividend stock to buy right now. Starting with AT&T's earnings, revenue increased by 1%, earnings per share fell to 57 cents per share compared to 65 cents per share in the same quarter the prior year. AT&T has been doing an excellent job attracting new subscribers, new net postpaid phone subscribers. 11 straight quarters of growth here, while postpaid average revenue per user increased 2% year over year. Let's flip to Verizon, which experienced revenue decrease of 1.9% year over year. Earnings per share also fell to $1.20, which was down 11% from the prior year. However, Verizon experienced postpaid net losses, so it lost subscribers, 127,000 of them. Maybe they went over to AT&T. But Verizon added 437,000 broadband additions. So Verizon did really good in terms of adding home internet connections. Now looking at some of the cash flow metrics, AT&T generated free cash flow of $1 billion in the quarter. That was down from the last year and really small when you consider it's got total debt of 137 billion. It needs to generate better free cash flow. It needs to generate better cash flow from operations so that it can service this debt more sustainably. In that regard, AT&T has instituted a huge cost-cutting campaign trying to save $6 billion in annual costs by the end of this year, so it's on track to do that. Verizon, meanwhile, also has a lot of debt, 141 billion, but Verizon generated $8.3 billion in cash flow from operations. This was up from 6.8 billion in the same quarter the prior year. So really different results here from the quarter here. AT&T adding 400,000 net subscribers, Verizon losing subscribers, AT&T narrowing its cash flow, Verizon expanding its cash flow. So really interesting differences here from the two telecommunication companies. So now let's look at those historical financial metrics I mentioned earlier in the video. I know there's a lot on the screen here, but I'm going to go through each one of these in detail. So stay tuned here. Just let's take it one step at a time. Starting with the top here with the dividend yield, you have Verizon in purple and AT&T in the orange. And what you want to look at is the most recent figure here on the right. And this is their dividend yields right now. As of this recording, you can get a dividend yield of 6.74% with Verizon, and you can get a dividend yield of 6.32% with AT&T stock. So their dividend yields are not very different, only 40 basis points separating the two dividend stocks. Next, let's look at their valuation. Verizon in purple and AT&T in orange again. And what I'm looking at here is the forward price to earnings ratio. This measures how much you're paying for the earnings that you're getting, right? Your price per earnings, price to earnings. The lower the price to earnings, the less expensive the stock is. So with that in mind, Verizon is more expensive at a forward price to earnings of 8.24 compared to a forward price to earnings of 7.234 for AT&T, but not much of a difference here. Only a multiple of one difference separating the two dividend stocks. Still, Verizon is more expensive. So does Verizon deserve to be more expensive, or does the more expensive valuation justify itself? And I would say yes, it does justify itself, not only because in its most recent quarter, Verizon's performance, I believe, was better, especially the huge boost in cash flow from operations, the increase in broadband net subscribers, the increase in average revenue per account was more robust than it was for AT&T. So overall, I think Verizon had a better quarter. Additionally, what I have here in the final financial metric is the operating profit margin over the trailing 12 months, and I have this going back all the way to 2019. So what this shows in the purple Verizon and the orange AT&T is that Verizon has outperformed AT&T according to this metric, which I believe is one of the most important metrics, operating profit margin, by a considerable margin over the last 5 6 years. And AT&T is making progress in closing this gap here, but Verizon is still ahead at 22.2% compared to 19.29% for AT&T. So all things considered, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. I think Verizon deserves that premium valuation, and I think Verizon is the better dividend stock to buy right now between these two dividend stocks after accounting for this latest quarter's earnings results. All right, so that's all I've got for this video. Thank you so much for watching. And if you enjoyed this and you want to see more videos like this one, go ahead and subscribe. I'd love to have you join the channel. I'll see you soon.